when you talk about credit,
yeah,
can you just quickly
good point.
tell us what that is?
If you think about bonds, there's a couple of different ways you can invest into bonds, but you might invest in government bonds, which are country issued, so New Zealand government bonds. Sometimes they could also be local council bonds, so Auckland Council, Christchurch City Council, whatever might issue bonds. So they're government backed bonds. So your credit risk is the country. Then you can invest into corporate issuers. So that might be
like Fonterra.
Fonterra, exactly. I was going to say future building, I don't know much at the moment, but
that's a lot of credit risk.
but if you think about Fish and Pike are large organisations, and they're looking to raise capital, but they don't want to go to the equity markets and issue more equity. They want to go to the debt markets and borrow off that, and they can do it. At rates that are typically higher than term deposits. In terms of from the investor's perspective, we can get a higher running yield than term deposits. But then you take on that credit risk that the issuer will pay back the loan. And typically, if you're going with an A-rated corporate issuer, and when I say A-rated, there's rating agencies around the world that will go out there and say what's the credit quality of that company. In New Zealand, we've never seen a default from an A-rated credit issuer. It's typically, very strong, solvent companies that have got very good balance sheets and very good earnings as well. So that's what we mean when we're talking about credit.
So credit's almost another way of talking about corporate bonds.
Corporate bonds.
Yeah.
Okay. Thank you.